All right, hello everyone. Good morning, good afternoon, good evening, from wherever you are. Great to see everyone again. Thank you for the emails. I see they're still coming in. And those of you that I've met through the years, I may not know names, but definitely remember faces. And hopefully one day, when all this is over, we'll all see each other again as well. But for sure, if you want the priority access to the new venture that's launching, definitely email me at tradingwithjasmine@gmail.com. I'm looking forward to it, mainly because, when I first started, there was so much out there and so much unnecessary things that I went through that really hurt me more than helped me. And still mad about it, I believe. The people who try to teach you, saying that, oh, it's I'm your mentor, I'm this, I'm that, and meanwhile, I didn't get anything out of it. So definitely don't get fooled by all that. It's hard when in the beginning, I know, but if you find the right place to go, definitely get to the right place. Well, let us get into today. Okay, so for today, a couple of things. What I've noticed this morning is that the markets that we normally use for correlations, they've become divergent again. So typically when we see safe haven plays such as gold, the dollar, the bonds, all those that where equities start to fail or rise, then they would move in the opposite direction. Today we are not seeing that. Fundamentally, different reasons why. So we will go through those reasons for those markets as we hit upon them. All right. Also, what is important for today, if you once we get into the chart, you'll also see that we have fallen off of supply in equities and rallied off of demand in equities. So right now we are in between the area. So for the current equity prices, we are not offering low risk, high reward entries. So that is an important point as well. So the last thing also I want to talk about is let's simplify the confusion around oil. I did notice some people were a bit confused over what has happened in the last couple of days. So we are going to discuss that too as well. Okay. All right, let's get into it. Well, there's a lot of things that cannot be covered. This it's beyond the scope of this session. That's why we move into a different area to do it. Okay, so you should be able to see my charts now. And let's really take a look at where we are with everything. So we're going to go to S&P, but let's look at this Nasdaq first. Remember where we were the other day, where we came down into now. A little bit, you could see we're focusing on this gap fill, and you can see that's more or less where we came down into the gap fill inside of the Nasdaq, and we've continued to rise from there. But from this, we have continued to fall from our Russell supply zone. So that's why today, at the moment, is not a very low risk, high probability reward risk area, just because of where we are. Okay. But let's go take a look at what we have at the current moment. So for the S&P, before we move into this chart, let's see here on the weekly. You can see on the weekly, we have bounced off of the weekly demand zone, but where we are headed back up to, if you can take a look right now, is right back into this whole general area, if you can see, right? So this area you can see is going to be somewhat of an issue. This is the last place you can see where price broke out from. We started to come back. A lot of people indecisions inside of here. A lot of people would try to go long, and then now they got caught out there. If prices bounce back, I know it looks, it's quite a bit away, but you can just see if they start to come back, then all of a sudden they say, well, I gotta get out. Then some people are looking also to short. So you got a lot going on inside this area, so it should be choppy for a little bit as well. We've been having a little bit lately. So now let's go take a look at today. All right, so currently you can see where prices are. This overnight high and is right up against this 50 moving average again. And you can see the overnight low, fairly tight range here at the 27.72 to 75. Not too surprising because you can see we are caught between a little bit of demand as we start to fall back down. If we take a look what's above current price, you can see the fresh area is really coming in closer to the 28.43 to the 28.52. What's right above current prices are overnight areas. And if you remember, this overall zone right there, that's basically our overnight area that's above current price. I didn't consider it much of a fresh area because we've been trading in here for quite some time. That's why I chose the upper zone for a fresher zone. But you can see this will be above the overnight high. That's going to take us right into this 28. Starts at about 28.14 to 28.23. Down below, so if we move below, I need more days here. So like I said with the Nasdaq we have come into demand, but let's take a look. And the reason why I'm moving below the yesterday's low is because the area in between is not the high probability. We can hold in there, but not high probability areas. So you can see we do have some 5-minute areas below current price at 26.8775 to 26.66, and then even more right below that, these two zones, as well as we get into the 26.10 to 25.95. Now for the Nasdaq, not sure what happened here. So for the Nasdaq, what we did have is a couple of 5-minute zones, and it went into the very bottom of the 5-minute zone before it rallied out. Also was into a 60-minute. And I kind of want to show you where we are with all that too. So you can see the 60-minute. We had a couple of 5-minute zones inside of this 60-minute. Anybody get long the Nasdaq yesterday? Yeah. Or anybody get long the Nasdaq inside this overall area. So you can see that we had a couple of 5 minutes inside the overall 60-minute. Prices started to rally out. We've come up and we're hitting up into these two zones. This first one you can see has been pretty much used up on the first one. Second one a little bit higher. The upper part of that zone is coming in a little bit closer to 87.16 to 87.60. So that's the upper part of that zone. And it too, you can see right now we are very tight inside of a little range right now after moving off of demand, hitting some supply, hitting into first demand right now. And as far as what's down below, it looks like to me it has hit too as well. So not a high probability inside of the overall range at the current moment. You can see too what we have above current price. We have up at the 90.72 to the 92.06, right? Down below, of course, back into this range again, will still be some demand too left as well. So if it does come back down into it, you also want to continue to look for that for some demand. You get the same picture there on the Qs. Right, that's coming in at 220.97 to 224.70, and then down below at the 203.20 to 199.60. As far as trading, I mean, you're using the charts you do need to trade with, right? So you can go smaller time frame if you want to do some day trading, of course, right? So we'll do both, but you still the importance of these charts is number one is to see where your turning points are, right? That's one thing. Another thing too, of course, you should take these trades because these are where your high probability low risk entries for the greater turning points are going to be. So you should be taking them too as well. I do want to stress, you don't want to put lines on your charts that you're not going to take. There's no sense in that at all. There's no sense in drawing 10 different levels on your chart if you're just going to take the one level, right? Because all that's going to do is cause confusion for you. You only want to put up lines on your chart that you are going to take. Okay, if you want to use it for some other things, put it on a different chart. Don't put it on the chart that you're going to trade with because that should only have the levels that you want to take. And that really should be the only levels you should be shown to as well, just in general. All right. So you can see here on the SPY, we got 284.40, 285.40. And got an open gap down below now, but remember that's where we're rallying from. I don't consider this fresh too, coming back down to this gap, because you can see that we've been here also quite a few times, right? So if we do come back down to this gap, I don't consider it as fresh. If we come a little bit lower, it will be hitting this same area again, but this general gap is not going to be as fresh, I believe. And then, of course, the fresher level also coming lower at the 260 to 257. So RTY, we do have this zone that we've been falling off of. But of course, we still have our upper zone too as well, which is going to be our refresh zone at 1278 to 1359. Well, this is what it is with the range, okay? If I could put it into some sort of perspective for you. The range, all right, let's take we can use the Russell for example. All right, so let's take a look at this Russell. So if you say, okay, I come into the morning and I trade 5-minute charts. All right. You know, you're new. You don't want to focus on too many things. So, you know, I just want to trade, you know, 5-minute charts because, yeah, well, that's what I want to do. It's low risk and this and that. Okay, so right now you're taking a look at it and you go, well, you know, hey, okay, maybe if you didn't see this side yet, you say, well, this could be an area, right? This could be some demand there. Okay. Okay, you didn't see this side yet, and you say, well, maybe this could be some demand here. Yeah, okay. All right, good. Okay, not. And then you come in here and go, well, you know, yeah, this could be some supply here. Not bad, but you're still going to get stopped out. The problem is you're inside of a range, but you can't see it because you're sitting here looking at this, right? You're just sitting here looking and you're saying, well, uptrend. Oh, let me try to go with it. Oh, okay, maybe not. Uptrend. Oh yeah, here we go again. Here we go. 3 candles up. Almost time to buy. Let me go. Okay, not. Okay, 3 candles down. Let me try to sell. Okay, maybe not. So, right? And then when you go like this, or you go like this, you say, hold it. Where am I? So you just took 3 losses in an area where you should not be trading in whatsoever because you should have been taking it off of one side or the other, right? If you didn't get to your demand, fine. But if you got to your supply, you should be taking it, all right? Shouldn't be taking it inside of this mess right here and expect to take the levels that are going to be a trending level when you're not in a, you're not in a any sort of direction whatsoever, right? Eventually it's going to break out. It's going to start to move again, but we are not at those areas at the current moment, right? So let me show you the picture on the IWM real quick, and you can see very similar. Okay, you can see the fresher area is going to be the 126.71 to 129.54. Hit into first target, second one you can see is closer to this area, which we have not been back down there, and we are holding up above it at the current moment. With the YM, we've continued to fall off of the 240. So with the YM, we've continued to fall off of the 240. Still has room if it wants to make it down to the fresher area of demand. That's still coming down at the 21,952, 21,645. So you can see right here, I mean, you can still attempt some shorts in between, but what's going to happen is you didn't get the best area of entry yet. And now what's going to happen is when you move back, you could have some new demand, things of that sorts too. So this is the picture that you're looking at currently with the YM. So with that being said, what we have here on the 30-minute, you can see just a little bit higher up, right around this 23,800 region. So again, all of this is inside of that big move down from that 4 hours. I just want you to be aware of. Doesn't mean you can't take these areas, but you do have to see what your profit potential is by the time you get there, because it is in the middle of the area. So you can see this area is 23,793, 23,872, and then back up above this 24,000. That's going to be at 24,026 to 24,096. So when I was talking about the correlations before, what I came in and did see was, okay, bonds are weak, so equities are rallying. So here we are, right? Bonds weak for the overnight session. Is still continuing to hold a little bit of close supply right now. And trying, so this is an area to watch out for if it starts to break this. So right now it's hanging on to this demand, as you can see. So a little bit hanging on to this demand. We start to break down a little bit more. We should have some new supply forming right up above on the 10-year. Okay. Opposing at the moment, if we break below, is going to be this opposing the opposing demand on the overnight level. So something to watch out for with the bonds. The other one is the U.S. The U.S. too. So the U.S., as you can see, this area I put as a retested only because it does have a fresher 240 up above. So that's still the area I like better. It has not, it's the same thing as the U.S. It really has not taken out its very close demand quite yet. So 240 I still believe is going to be the fresh area, but this will be an area you can also watch too, along with the TY, which is at this 181 to the 181.30 to the 180.82.8, and you can see that we did attempt to try to come back there very closely once before. I consider a bit of a retest because it did hit almost like the bottom of the wicks here, so I do consider that more of a retest. And then down below we still have this demand got hit once already, and then this one is an overnight down below. So that's what we have in the U.S. for right now. And like I said, this will typically be your inverse market to the equities. A lot of times they get very quiet though. I have noticed that the VIX is starting to drop back a little bit lower than the 40s. So that's something to keep an eye out on too, because if it remains in the 40s and above, we're still going to have volatility, which is still trying to tell us that there is still some bigger ranges to come. But right now, it does look like it fell back from, we'll go to that in a second, fell back from some supply. Pretty close to the supply, as you can see, pretty much a gap. I believe it was a gap. Yeah, the gap fill area, and pretty much has fallen back. And now it attempted to try to hold on to this area, but really the lower area is coming in closer to this zone here, which is the 36.17. So if it continues to drop to there, we are going to lose volatility, and the market should be a little bit complacent, and bonds drop and this drops, you can get more of a market rally. The other market I was watching is the DAX. The importance of it all, for those of you that's watching the news, we do have some, with the ECB that is going on. They will have decisions next week, rate decision next week. But for right now, we're talking about the stimulus package, and they said they will accept the junk debt as collateral, right, for loans. So that's one thing that they have decided today. It's still going to be in talks. More than likely, it's not going to be done today. It's a more difficult situation for them because they have countries that are not doing well, and And so who's going to really take on this whole, eventually who's going to be stuck with it. So but right now they need it. So that's the more important part about it. But for the longer run, who's going to really need it. So we are seeing dollar strength with all of this. With the DAX, you can see, so they're a little 5-minute area, nothing too special with it, which 10.428 to 10.444. But our 240 zones are still up above at 11.398 to 11.640 with two zones on top of each other. And don't forget, we are still coming off of our overall, well, now you can't see it at the moment because we need more data. On the 30-minute. Okay, so we're still falling off of our 30-minute zone. And still also has some room to the lower demand zone too as well. So that's on the DAX, which is the German market. All right. So let's go and talk a little bit about oil right now. So I did notice that some people, so I'll show you the oil first and then we'll talk about it. Some people were still a little bit confused with it, but let's go and see what we have right now. So you can see that at the current moment, it's going to open up in another about 33 minutes. The overnight high is still being made, but right now we are up to 1673 on the overnight high. Overnight low is 1335. We do have a 5-minute level that's below the overnight low. That's coming in at 1182 to 1152. I do want to warn you one thing about this 5-minute though. There's also an overnight made through yesterday's. I believe it barely touched the tip of it. I do think it was a hit on this overall zone. And you can see how it fluttered up there. But if it does, the only thing I don't like about it is just there's too much open air down below. That's the only thing I don't like about it. This one over here, you will see that is a part of a bigger 60. So the reason why I bring that up, because sometimes, when you get extra volatility, you want to be aware of that. So that 5-minute is inside of this bigger 60, right? As you can see right there. Okay, as far as the supply goes, you can see on the 240, that's really where your next significant area is going to come in from, which is going to be this 2114 to 2275, right? All of this is still below our previous 240 supply zone as well. The big thing about, okay, I mean, trend, right? Let's talk a little bit about that. What is really trend, right? I mean, yeah, when we see the stock market making new highs, when we see crude oil making new lows, we know one's an uptrend, one's in a downtrend. But where do we want to focus on, getting in our entries? We don't want to, take it on a break lower or a move higher. We want to get in where we can still get pretty decent profit from. So therefore, more than likely, we're waiting for prices to move back or pull back into to get on. And this way, it's going to defeat the purpose of the overall trend. So it's very hard to get that low risk, high probability trade if you're constantly focusing on that. Also, if you're coming in trading every day, what you'll notice is every session, every session that you have, whether it be Asia, Europe, or United States, you're going to have traders that come in that's looking for the low risk, high probability opportunity, and that's typically not always going to be in one direction. Sometimes, yes, you will get every market moving in the same direction, but a lot of times you're not going to get every market moving in the same direction. So the focus needs to be on quality levels and stop letting it, I guess, affect you so much that it changes your whole thought process on trend anyway. So yeah, just give a little bit of thought to that, and we could always come back to that whole, it's a big topic, very subjective, with all that. But let's, I do want to clarify something with crude. Some people have had some questions, so let's go talk about it. All right, so some people are saying, well, I don't get it. There's prices are still sitting at, they're telling me it's below zero when I can see clearly that it's not below zero, right? Clearly you can see that. So, so this is basically what, 2 to 3 days ago or so. The May WTI opened at 1773. And so for the most part, so remember, we got to roll every month, right? In crude oil, we got to roll. So for the most part, most of the June contracts have are already done, right? They're already rolled. So remember one thing, the liquidity in the May contract is already very thin, right? So it's already very thin. So you get more stability in here. You could take a look. I put the volume down at the bottom for you. You can see what happens there, right? But you can see that as the day goes on, then people start to panic, right? People start to panic once we start to see more of that capitulation going on. The people holding May, you're going to get that call that said, hey, listen, if you don't get out, you're taking the delivery of this oil. I don't care where you're going to put it, but you're getting the delivery. So now the panicking really starts, right? So you can see May contract holders were willing to pay as much as $40.32 to take oil off of them so that they didn't have to take delivery on expiration the day after, right? This is what they're willing to pay people because the panicking started just because it was expiration, right? And over here, we never got down to even zero. So you see the difference here with the contract. So that's why, I always say, I'm one of those people where, okay, I open up a box and it says, you got to read the instructions to put this together. And for some reason, whatever it is, I fight with all my thing that I don't want to read it, and I'm going to stick this thing together no matter what. And there's always one piece or another piece that I should have put in the right place. I didn't put it in the right place. And then all of a sudden I got to take it all apart and I got to put it back together again. It's always something like that. But yet every single time I refuse to read the instructions. So the same thing happened when I first started doing, this too, where I was like, okay, I'm trading the Russell, I'm trading oil, okay, no problem. We're all good. I'm day trading, so it doesn't really matter. But then, then it came into, I was like, well, I could do corn, I could do wheat, I could do anything, right? So why not? And I remember back then it was, TradeStation would actually call you up and say, listen, gotta get out of your corn. Unless you want it, you gotta get out. And I'd be like, what? And I think people, when they get into these markets, may not always be aware of this situation. So always pay attention to it. Sometimes a lot of times it's not going to hurt you because it's not a huge difference, but there's always that time. And unfortunately, this was one of those times. Extraordinary, but nonetheless, you always got to be very, very important. Okay. Now, the other thing too, what we want to look at too, is the differences with. So take a look at this chart here. What we have is CL against USO, right? And you can see, well, why is that different too as well, right? Why should that be different? And so remember, USO is an ETF, right? So when you have contracts in the future that are priced higher, then we have something called a contango, right? When that happens, you can see that the ETF ends up holding, fewer contracts than it did before the roll, so that they can maintain the value, right? And over time, this is going to negatively affect the performance of the funds. So whether it continues to drop or it stays equal, you're going to see that it's going to affect the fund because they have to just require less contracts to hold, right? So this is what happens, and you can just see on a monthly basis here, and just continues to create this performance overall. All right, so that's just a few things to clarify. Hopefully that helps somewhat for all of you that did have some questions and was wondering why certain things happened at certain times. Just pay attention to it, especially when you get into futures contract. I listen to the news, and there's a lot of people. If you listen to something such as CNBC, all you're going to know is stocks, right? So that's why everybody starts out with stocks, because that's what you're being taught. So you really don't even know anything about futures contracts. So when something like this happens, you're like, what has happened? But you get cheaper gas, so what can I say? All right. That is a look on that. So now let's go back. Okay, let's get a look here on. So we had this area. This was a retested zone on the 5-minute. Anybody capture that on the nat gas? It was not easy in terms of if you move it to break even, or if you took quick profit, it's fine. If you held on to it for a little bit longer, that's where you really got that payoff from. So either way you can see. But if you didn't hang on to it, you didn't get that full move out. But you can see right here we had an area that, remember, this was the first little sign that nat gas was showing a bit of strength for quite some time. And so this area we did not come back to. So that's the area we're still going to have. Right now we're watching for a break above, and then start to see more buyers start to come in. The first initial break, though, you are going to run into your gap area. Right, okay, so this is what I put the upper area a little bit more significant, but this is where you're going to run into initially. So you could very well get a pop first and then come back down and then start to move again. So this whole congestion area where you have a little gap and a little zone up above, that's the first area you're going to hit on a new move above the previous high. Okay, Susan's in UNG. Okay, excellent. Nice job. All right, so that's on the nat gas. Now for gold, now I know some of you took a short, some of you took a long. I want to know the troopers though. Anybody actually hold on to it? Anybody actually Well, I know a lot of you were in it. There was a few targets, hit the 1 or 2 targets, but actually, did anybody actually hang on? It's one thing to say you're going to hang on, it's another thing to actually hang on. So just out of curiosity. I'll look into that next time. Get it, you. Okay. So anyway, on this one, you can see that either way, but you can see huge moves, right? You've had some huge, you have from the 1764 down to the 1669 and the 1669 back to almost to the 1760. You can see with the gold and the metals in general, we have an environment that we have aggressive stimulus, we have depressive government bond yields, and so it really doesn't matter what the inflation outlook looks like. These situations tend to be supportive, right, for the precious metals and especially for gold. Copper, has issues when the overall stock market is weak, so it will have issues because it deals a lot with China. But when it comes back, copper, does rally well too. Metals in general does well in this environment, but gold does the best because one, it likes volatility, and two, it does also act as a safe haven more than the others as well. So this is the look that we have into gold. I did have an area, like I said, you wanted, the best is inside of these larger turning points. I did have a smaller time frame, I believe. Let me take a look. Here we go. Okay. Okay, I think it was a 5-minute. Yeah, so on the 5-minute, you just have these two little zones here: 1721.20, 1718.60 to 1716.5 to 1714.4. Okay, and then with copper. So copper did a nice little turnaround with the equity markets. We did have a little 5-minute zone it bounced from, had some demand underneath. We continued to move up, getting closer to this upper zone at 23.26 to 23.33, as you can see. That will be above right now the overnight high, because the overnight high was already made, I believe, at 8.20. And some new demand here at the 2255 to 2247. I believe silver also has one coming up. So the only thing with these metals now is you do have some new demand that's also formed with them. And silver too, coming up to this area looks decent. Just like I said, you do have some close demand. 1590, 15.94 to 1608. You will have opposing. I don't think the first one is already tested. So the second one, I believe, is going to be your opposing at 1530 to 1515. Okay, before I move into the currencies, I do want to point out that, so for today, so yesterday the outperformers was the consumer discretionary and tech stocks. So those were the outperformers yesterday. What I did notice was Target was a laggard with that, because everybody else was green and Target wasn't. And then they even gave, I believe, it looked like pretty good, overall. What happened is, you can see it popped up right into the first area, and we've still continued to fall back, which is this gap area here. So we've already popped up into the 109.50. So we still have the 110, 110.35, 111. And the only reason I look to go against it, because I would imagine, that's something that, why would it be bad? So I'm not quite understanding that, but you can see this, there is room to where the fresher demand is at 97.17 and 96.38. Let me move into, all right, so we're at 59.83, so a little bit of a fallback, came to 61. So this, I believe, is going to be with the markets too as well. If you have a strong Nasdaq, you can continue to go with it. Below on the 15-minute by the gap, you do have this 53.81, 53.08 overall area by the gap. And then the other one on, you can see what, let me just see, I believe it was, okay, so this one you want to watch out for, since we are starting to have a hold in oil, and you can see that it's coming off. Well, no, this is still the monthly, it's still a little bit lower, but right now we can watch for this area here. We're at 40.60, so actually we are higher, so you would need a pullback now. But you can see now on the daily you formed this 35.92, 33.50. So you could keep this on your radar for if it does drop back down into some demand. Like Sam says, you can always, you don't have to try to pick the bottom in crude oil. These stocks have been holding up, and so you can get into the stocks with oil. And you don't have to pick the bottom in the other markets. All right. There you go. All right, let's go take a look at the dollar right now. Okay, let's go to the dollar. Okay, so I find it interesting with the dollar, with everything that's being said and this and that, and we definitely had a nice move from the dollar. But where are we with the dollar? What does it look like to you? At the top of the range, but we're in a range, right? So, the dollar is one of those, it's basically your global safe haven currency. And, it usually gets a little bit quiet. It starts to pick up again. Next week, we definitely have the FOMC and ECB. But remember what has happened, last month, all these emergency cuts because of the virus. And so we had all these bankers that came out that were cutting things even before their rate decisions. So now coming in, I mean, things should have calmed down. So should we be expecting kind of the opposite to happen? So instead of, all this craziness that we have to quickly cut, now all of a sudden will it be the opposite of, well, now things have calmed down, so should we slow things down? Should we so the stock market, I think, is going to be a big factor of that, because if the stock market can remain with the VIX not too high, the stock market holding decently, you more than likely don't need a whole lot more stimulus, then you should stabilize this dollar back again. But if you get the reverse, where you get the VIX popping, you get the stock market dropping, you're going to see this dollar back flying. It has a momentum going built on the ECB, on the euro, right, causing the stimulus going on. So that's already causing a bit of a movement out there. But the added movement will be just like what I said before. At the current moment, though, you can see slowly inching up because of the euro, but overall, we have not come to any conclusion. They said it could take weeks to months anyway for them to figure out the exact terms of the stimulus. But you can see we are sitting up there. So again, just like with equities, not the best areas to take your trades in. All right, so what we have here is, let's take a look here. The euro, let's go take a look at the euro. So the euro on, I got to hurry up before the grass cutter. You can see up above on the 5-minute, we do have a 108.51, 108.57. You want to watch out on the daily. The reason why I say that is if we do break below, if we do get more of a break, you may form a little daily supply even here. That could go along with what's going on. But you can see that that's a possibility, not quite yet, but you can see it is a possibility. So that is something to keep an eye out on. For EC, that same area is the 108.64 to the 108.70. Swiss franc. Now remember, Swiss franc can be also a little bit of a safe haven. Right now it does react more onto the dollar. Up above, not ideal in terms of there's a lot of trading to the left, but looks like a decent level right above all this mess right below. 103.41, 103.59. And remember with the FX mark, the spot market, that's the opposite picture. We just came back and hit the same supply again. The better demand, you can see it's really coming at this 95.85, 95.65, but that area that I was showing you where the sloppy area is kind of coming in at this 96.86, 96.77. And let's take a look at the peso here. Okay, you can see this area did touch the lower portion of it, but the upper portion still looks okay to me, which is 0.04099, 0.04108. Some of these are at very extremes. So I more than likely will reassess them next week ahead of the overall meetings, because if something were to majorly change, you can see that can cause some greater volatility given where these markets are in general. And you can see the closer demand, you can see 24.1094, 23.9099. Okay, so that is what we have for today. Hopefully that helped. If you liked it, please subscribe. Keep the emails coming. I will put it back up again for if you want the priority access. And let me bring that back up. Okay. So definitely email me. We will get going. I am looking forward to it. Like I said, a lot of things that I couldn't do before, I want to bring to the table now and continue to let everybody grow together. All right. So have a great trading day, and I will see you next time.